All righty. Doctor from North America, good morning, good afternoon, and good evening. It is, what is it? It's 9:32 p.m. in Tokyo. Let's see what we got going on here this morning. Let's go to the chat line just right off. I mean, you can see the dollar index going up. Again, interest rates are rising a little bit here. Nothing major, of course. Not at the moment, let's put it that way. But we are seeing some interest rate rises constantly now for about 5 or 6 days. And that's kind of like where we're at the moment. So you can see the dollar index, that's a daily, and it's slowly drifting up. There's 3 green bars over on Chicago Quant. Same situation. You see it right there. You see it's something's weird there about it, but I think, is that right? Let's just double check that. Sometimes the data feed gives us different things. I have to go check it. There's the 27. So it's 2 days there. There we go. Like that. And then I guess, from there, I'm waiting for my chat line to come up. For some reason, it's spinning. It wants me to update. I got to do some updates, and I'm not going to update. So I'll just wait for it to appear, or I'll do it on another machine. It's one or the other at this point. But you can see, and I'm sure you're hearing me. And or Giannis would be texting me saying, "Doc, where are you?" So at this point, that's what we're seeing. We're seeing the markets, interest rates. Let me just throw an interest rate chart up there. Let's just go with the 5-year for the moment. Right. Where's it at? Right. There's the 5-year, just the shortest of the 3 that we follow. You see it's been in a downwardly trend. When the price of a bond or a note or a bill goes down in price, the price itself of buying it, usually interest rates are rising. Not usually, that's how it works. Interest rates are rising. Okay, so that makes sense, and we're seeing it now when we look at the dollar pairs trades, with all the different pairs like a euro, like right there. You see it's last 4 days or last 3 days here. You see it's since we went into the sell, it's just been kind of drifting down. But overall, the weekly looks very firm. So it's not like we're seeing a lot of problem here. I mean, look at that. Lots of buying going on there. And then when we go over and look at the dollar index on a week-to-week basis, like right here, it's that pretty much it's been just falling down. It's not even making an attempt, just like it's not making an attempt right here. It barely, look at it, it's just touching the time manifold on the plus side. So it's not even, showing great weakness or something like that. Now we're getting a spinny thing again. I'm still not seeing the chat line. It'll happen, or I'm going to turn on another machine in a few seconds. Matter of fact, the heck with it. I'm just going to turn on another machine and let it be a race. Let's see. The other machine's already running, and just have to sign in, and I will be able to see the chat line. There it is. I see it. The horse race has ended. And you can see there, I don't see anybody on the chat line at the moment, so that's all right. Hide chat? No, I don't want to hide chat. There it is right there. Okay. No, that doesn't make any sense either. Where is the chat line? Show chat. There's chat. Okay, so no one has said anything yet. That's what it really comes down to. All right. So from there, again, we're in Fed week. The Fed is having their meetings for the next 2 days. Really, the horse race there is, will they go a quarter or will they go a half? And they say money is projecting a quarter. And I think that's a good thing. I think it should be a quarter. Because we're seeing some of the weirdest statistics, in the sense that unemployment is not going up in America. It's going down. And here we have the Federal Reserve tightening the marketplace, with higher interest rates, trying to slow the economy. And you would assume they have that in their recipe. So in other words, they're looking at it and saying, hey, we're going to raise these rates. We've been raising them. And we expect to see unemployment go up, not go down. Last numbers reflected it again. They went down again. So it would make sense for the Federal Reserve to do a quarter, not a half. And he'd be able to easily say that. You know, it would make total sense to me. Sometimes Powell really surprises me on his level of, I don't know, for all the information he has. No, he doesn't really give us the best of heads up. Let's put it that way. We're having a sip of our tea there. That feels good. And let's go just double check the chat line on another machine, just to double check to make sure that I'm not just having some, because it looks kind of blank, you know, it does. All right, so the other machine is cranked up now, and let's see what the chat line looks like there. Because I don't want to drift away from the chat line. There we go. No, it's blank. How about that? Okay. Just, oh no, there they are. I see that. There's Robin. Robin says greetings. The other machine's not showing. Oh, now the other machine's showing it. And then there's Big Guy. Hey, Big. The Big Guy. Don't tell me that Joe's in the house. Is this Joe in the house? The Big Guy? Oh my God, I love it. The Big Guy. And there's Janos. And there's George. And there's Metho. Oh my God. Why wouldn't he see the chat line? That computer I use is asking me to update the operating system. You know, the Windows. You know, so it's like, I don't want. And I'm using, and it's the operating system because I use Chrome. So, what can you say? All right. So I can see the chat line now. 10% for the Big Guy. Exactly. Exactly. The Big Guy. That's so good. I have a sip of tea from that. So, you know, the Fed Reserve's doing its meeting. Interest rates are drifting. I don't really look at it as, you know, look at that movement. We have what? We have the euro up on Chicago Quant at the moment. Look how tight that is and how small that is. Let's widen that out. I mean, it's like no real action whatsoever, really. I mean, it's going down, but it's not really going down, you know? It's not like it's... Look at it. Look how tight that is. So it's nothing major. It's just natural weakness, you know? And the weekly isn't even participating with it. So that is the action we see there in the... Big Guy says, you need to update the operating system. I've got like 7 computers here. I only read I do emails off of that machine. I don't pay it. And I watched the video. I watched the, matter of fact, I did what it said too. It said, go to, what did it say? It said something like, go to settings. And I went to settings. And then I went to, it has, you know what it is? It has 8.1 on it. It has, it's not, you know, it's got 8.1 on it. So, you know, I did what they said. It just didn't pop out. I'm looking for the file to update it. Remember, it's not natural now because 10 doesn't accept 8.1 anymore. So, the machine's like 7-8 years old. It's got, you know, some interesting stuff on it. So I use it. I replace parts in it, keep it going. But I don't use it more than a couple hours a day. This way, but now that it's acting funky like that, until I update it, I'm going to use the other machine. I have another machine. I have a bunch of machines laying around here. And the screens are up, and it has double screens, the whole bit. Okay. I will, though, Big Guy, I promise. I love your nickname, the Big Guy. I love that. I think that's great. All right. From there, we drift over to the euro, as I said before, because we're looking at it on Chicago Quant at the moment. And there we are. Let's see, where is it at? There's the euro right there. It is. And there's the euro up on J4X. And then you can see the euro here on Chicago Quant. You know, it's just kind of cruising along. Little sloppy action, nothing major. Just just little. It's up at the top. I don't, and you can see over here, the weekly is the same way. It's just marching up, 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 up. I think it's great. That I haven't seen anybody use that. Updates give you the best security and less glitches. Oh no, I totally agree. But it's just one machine out of 7 or 8 that I'm using. So. And that is that. So I promise you, I will clean that up or not use it, one or the other. All right, now from the euro, let's see what the cable is. I saw the cable slide into a daily sell yesterday too. And we had somebody on here yesterday. Who was it? Trying to think who was on yesterday, was looking at intraday trading in the cable. There's the cable right there. And the weekly's still green, same as over here. There it is. And you can see there's the cable, and it's second day in a sell. Again, they're not exactly getting pounced on. They're not getting beat up, and you got to imagine that, or you would have to think, at least I do, that they're not going to do a lot of wild action until they see what the Fed does for tomorrow. But at least it seems like all the central banks in the world seem to be on the same page, in the sense of they're all raising rates at the same time or dropping them down. Look at the euro, straight up. Maybe time for a pullback. Well, that's what we got the daily doing that. But I have to say that I think they got more room to run. I really do. I don't really see interest rates getting much higher than where they're at now in the States here. Maybe another half a point higher tops total. With the new Congress, that really stops all the spending, and the spending is creating the problem to begin with the inflation. So you put those two things together, and there's not much of a reason for the Federal Reserve to be as aggressive as it has been, and how far remember, it took a year for it to even accept the idea that we had inflation. Boy, talk about disconnected financial people. The Federal Reserve, what did they do? They came up with that funny name for it. They called it transitory. They weren't even willing to accept the idea that inflation was going to be around for more than a couple months. That's it. That's all they said. It's transitory. Don't worry about it. And it ran from 1.5%, 2% to 9, almost 10%. I think it hit almost 10% at one point. Now it's at 6.5%. That's because they've raised rates. So yeah. I don't think the pullback will be big. I think it'll just be this. I think you're seeing it here. And let's go back to the euro. Let's go back to the euro for you. And you can see right there, the euro is, there it is right there. It's just kind of, it went into that. Oh, where's the sell out on the euro there? Let's put that in. There we are. So, you see the pressure on it, but it's not the worst thing in the world. It's it's not acting really bad. I mean, they're not challenging this low right here. I don't expect to see them go challenge, say, like, what is that? That's the 104.30s area. I don't even think they're going to challenge the tops here. See that right there? I don't think they're going to challenge those tops of 105 and change. Or is that 106? That's 106. I really don't. I would be surprised if we got down to 106. I really think that the natural tendency right now is for the euro. I mean, we just saw here. Where's it at? Let's make this tighter. There's all-time lows no more than 3 months ago. In October they brought it to all-time lows, and we had a nice little bounce off of that. We bounced from was that 95 and change, all the way up to 108 and change. And we went into a weekly buy in here in the 97 area. We went into the weekly buy here in the 97 area. I think we have lines in on the other chart. Let's go back and look and see the daily. The one that's black. This is one we send out to people. This one right here. So you can see, there's the low. We got a daily buy on that low that day. So we closed on October. Is that October? What is that? That is September 28th. So we closed at all. We didn't close at all time lows. The day before was a close of all time lows, but the low itself was on the 28th, and we got down to 95.30 something. Let me put my glasses on for this. 90. What's the all time low is now 95.35.8. Okay, against the dollar, and we went into a daily buy that day. And went into a sell, but it was a higher low of it. Went back into a buy again, and then before you know it, within that month, we got it. It was going sideways in here, and I guess we could move it over a little bit more to give you that flavor too. So you can see there, it was going sideways. Like making a reverse head and shoulders here. So there's the head, and there's the two shoulders, and it finally got up close to that, and here first, then there, and then finally breaking out, and never challenging the lows again. And we got into that weekly buy here in October, and it's been in a weekly buy ever since. So I really don't think it's going to fall back too much. The Fed thought it was just because of supply chain issues which solely caused price increases. I guess that's what they thought. I don't know what they think. I don't think they think anything, honestly. I think you're giving them too much credit. To be honest, I don't see them making a lot of mental decisions that make any sense. I haven't seen that in a long while. If they were thinking, then they would basically have told the Congress back then, stop spending. I mean, they spent $5 trillion in 2 years for nothing. And we're not seeing any of that money. And the campaigns for the Democrats have been like 4 times greater than the Republican. Where are they getting that money? It must be from those crazy bills that they passed. They keep on saying shovel ready, and they're going to build this and they're going to build that, and they're not doing any of that. They're doing nothing. So when they had transitory, this is what they meant. It was only supply chain. No, I understand that. I disagree. I don't think there was any proof of that. That's the problem. I agree with you. That's exactly what they were saying. And for a year, I was saying here on the webinar, it's not transitory. You can go back and look at the the YouTubes. I'm saying it's not transitory. We have real inflation. They're overspending. They stopped production of oil in the United States. They did all kinds of things. They stopped permitting. They did everything they could to hurt the economy, as far as I'm concerned. So when they started singing that crazy song of transitory, day one here in July of 2020, I was saying to them, it's not transitory. And then when Biden got sworn in 21, at that point, I was screaming from the rooftop here. It's not transitory. It's got nothing to do with transitory. It's got nothing to do with the supply chain. Yes, it has an effect. That's because the policies. It was the policies that stopped the supply chain, not that the supply chain broke a cog and the chain broke and you got to repair it. And then once you repair it, the inflation comes down. So I agree with you. That's exactly what they said. I just never agreed with what they were saying to begin with. I found it to be ridiculous. It was very clear. Economists were screaming from the rooftops. Enormous amount of economists were saying, "Stop the spending, stop." The regulatory stuff that you had passed. Stop it, and he didn't. And so that's why we have the inflation. That's why it also makes sense not to go to a half a point at this point, because what we're watching is we're seeing unemployment still drop as they slow the economy. So that says that the mechanics of it all is not correct. In other words, the Federal Reserve has the mechanics all wrong. Let's see. Inflation happens when you have strong economy. We had 6.2% GDP under Trump, with 1.5% inflation. No, that's not what does it. Plus supply chain problems, plus a war going on, you will see more than normal. Nah, No, I think that. I agree with what you're saying. That is the policy of the Federal Reserve. I just disagree that it's right. I don't believe it's right at all. No, I don't see it. I don't see it. I don't see the mechanics of it. I don't see the math of it. I don't see the proof of it. I don't see the history of it. None of it's there. But do they believe that? Big guy, you're totally right. That is their opinion. You're right about that. There is no doubt. That is their policy. So, and that's why it's fallen back to 6.2 from the nines, because they've raised the rates, and what's happening? Unemployment is dropping at the same time. So that says that there's some mechanical problems. You slow an economy, your unemployment's supposed to rise, not fall. Our unemployment is falling still. We're at all-time lows. So, nah. And I don't believe in, not in the 21st century, I don't pay attention to the lag. There is no lag. There is no M1 and M2 lags that we used to have in the 60s and the 70s and the 50s, where now the Federal Reserve can see what's in a checking account, M1, or M2 savings, and M3 and so forth. They can see those live now. So, no, I think the Federal Reserve has it 100% wrong. 100% wrong. So, all right, but good points. You're laying out the Federal Reserve's policy very clearly to everybody, and I agree. You are accurate. That's their ideas. They believe that, and that's something we all should be very cognizant of. That the Federal Reserve is basically disconnected from physical reality. All right. From there, we'll go back to the cable. How's that? Because I think we've made our opinion very clear from our math, what we think about the selling of the euro. It doesn't look very deep at this point whatsoever. It looks very shallow. Or as we would say in the hedge fund industry, it's not today's business, it's probably tomorrow's. And then tomorrow, you say the same thing again. It's not today's business. All right. So from there, cable, you see that. Let's put the cable back up there really quick. And there is the cable. Oh, cable. Oh, cable. There you are, right there. And it looks just as shallow. It has that same shallow looking nature to it. The weekly buy is just the third week now, but it's looking relatively firm. And you can see over here on J4X, same thing. It's that weekly situation going on. You see at the top end of its range right there. Let's see. Now, let's go over to the Swiss. See what the Swiss is up to. And remember, traders, if you want to see anything, just shout it out. We'll go look at it. I don't have to go through this rhythm. I am dynamic. I can adjust. And there's the Swiss on J4X, and you'll see the weekly kick in there in a few seconds. Let's put it up over on Chicago Quant. Right there. There's the Swiss. You see the Swiss went into a daily buy yesterday. It is lifting up. We have those Bollinger Bands on there because people have been asking about them. So there it is right there. You can see how lagging the Bollinger Band is compared to our math. Our math is way ahead of the curve. And that's those golden, what I call non-linear time manifolds. That's what I refer to these, because that's the way I view it through my mathematics. And then you can see here the Swiss, which is fascinating, is it's playing with the weekly buy, which that's a little surprising to me. It's interesting how the Swiss has really gone walkabout, that Australian expression, about the way it seems to shift a little bit more dynamically on its own than the way the rest of the pairs are going, like that. There we go. You see that we're through the zero line, and it has been, it topped out really nice. The at the top of the Swiss with the problems with Credit Suisse, the bank there. We went into the weekly sell right on that, and it's been in a weekly sell. But I'm a little surprised we're pushing into that buy. We'll see how they play with that, and see if they hold on or But I kind of, since I'm kind of like a dollar bear, overall, I really kind of think this is just a dead cat bounce and profit taking. That's all I really see this as. So in this case here, they are lifting pretty fast out of the, they've gone from underneath the manifold, but then look at the width of the manifold. It's collapsed from this here all the way down to the point where it's tightening up really tight. And that's usually, this could literally be like another hump and another move down. I think we got pretty far down. When you look at, let's go over to J4X. When you look at the Swiss, and there's the weekly now. Let's make it the whole page. It's going to take a lot of work to get it into the 80s, I think. That's what it really comes down to. And it's come and met this bottom in here. It's done for the last couple of years. And, that's a pretty tenacious area to get down to again. What it may become is, it might be a higher low, a lot of higher lows here. There's that one, this one, and these, and then, it took off to here, and then now we're generating lower lows. There's one there, there's one there. And will we break that low? I kind of doubt it, but we might. We might get down this area here in the, what is that? That is the, let me just put my glasses on again. There we go. So we're looking at like, 89, 90 maybe? And maybe this is just the way they work towards it, I think that might be the answer in the end. And so, that's the action we think we're picking up on the Swiss. And so you can see it here. This, it's starting to make that move, and J4X is doing the same thing. We got a little green there going on, and you can see it's coming off of its lows right there. The green line has now been over for, since up in here. It's been trying to tell us that it wants to bottom in here, and now they've put this nice low in 3 weeks back. So right there, that one. And if we make that a little bit wider, you get a chance to see that. 2 days later, was it 2 days later? I think no, we were a red and a green right there, right? So we didn't go into the buy that day. The next day we went into the buy. And so it's, just pressing up decently. And then we slid right back into the sell again, and now we're back into the buy. So maybe, once it take out this high, maybe they're going to take some profits. I mean, that's a pretty good move. 101 down to 92. It's just a pure distortion. You want to talk about transitory. The transitory of the yen and the Swiss, and the way it has flipped back and forth is really fascinating. Oh, big guy says green candle at the end means the pair could be going up. Yes, that's exactly on J4X. Yes, exactly, right there. Let's just it shows, and at the same time we're using. This is the green line is a fast moving stochastic, and the dash line is a slow moving stochastic, and you can see how the fast is outperforming. And you can see it's been trying to bottom since like right up in here. And now it finally has done it. And now that you have the green and the green line at the same time, both moving in that same direction, now you can start to trust that. And on Chicago Quant, you see we're moving through there the same way. Whereas we were in a weekly sell throughout all this. And we go in and out of dailies. And when the dailies and the weeklies line up together, it's a good trade. Let's see, big guy says, Swiss made a monthly double bottom going back to 214. That might be significant. I agree. Yeah, that's what I was pointing out. It could be. It could be. I think it is to some extent. You got to figure that the 92 is got to be, I've seen the product hang on the 92 area off and on for decades. And then it becomes like a window. Or not a window, like a line in the sand. And when I mean by window, it means that you can see the outside, where things are going in a sense. So, so at this point, I kind of think that we're just seeing a dead cat bounce. I think this is just some profit taking. I don't think it's going to be like going to 102 again. I could see it go up to 90. 93.5, maybe 94, something like that, and roll over again. I think that's pretty much what's going to happen with that. And then what we do is we drift over to the yen, because the two of them, the Swiss dollar Swiss pairs trade and the dollar yen pairs trade, seem to march along pretty well together. Now you can see here our fast-moving algorithm. That's the little blue dotted line there. It's already jumped across the zero line, and you can see the daily is only 14 ticks away from getting above it at this point in price. So they're both trying to get into weekly buys again, and that's kind of fascinating to see that action. Whatever. Yeah, and it would, just knowing the way the Japanese society is and the Bank of Japan and so forth, it would not surprise me that they are invested in the Swiss more in many ways. In other words, they probably park a lot of equity there. They park a lot of equity in the United States. They're the biggest bondholder in the United States, and in China is the second biggest bondholder, foreign bondholder. The number one foreign bondholder in the United States is Japan. And the second largest foreign bondholder is China, and then the third, I think, is the European Union, and then now the largest bondholder, of course, is America. We own almost 50% of all our bonds. It's like 47%. So the biggest bondholder in the world is us, the U.S. But it would not surprise me that the Bank of Japan and Japan in general kind of lean into the Swiss marketplace. It wouldn't surprise me at all. That would make a lot of sense. Because overall, they do seem to be conservative type of investors in many different ways. They can get outlandish at times. We saw that in the 90s, but overall, they usually are much more conservative. All right, so from there, we jump to the Turkish lira, right there, the Euro Turkish lira. You can see it's been in the sell for 3 days now. I don't know why the line is not there. Let's widen this out. Right there. So it's been in the sell since Friday, and you can see the weekly is having no problems. It is breaking the time manifold here, but it's still above the zero line. So let's just put the zero line in there, right there. So, and you can see the fast moving algorithm has broken down. Now that's been in a weekly buy since the middle of October. Since the what's those lows? The 16 and change, 17. And so now, we're trading up in the 20s at this point. It's trading at 20. As we speak, we're seeing. Let's put it up on J4X so you can see it without me putting my glasses on. Right there. So it's trading at 2037. I think all-time highs are 2069. They're not that far off from all-time highs. They've been hanging out up there. It's been interesting to watch the Turkish lira go from 1 to 20. If it wasn't, it was interesting to watch. I'm sad for the indigenous, the people who live in Turkey. To have to have their currency go from 1. Can you imagine if the euro went from 1, was it 108 to like 10? That's a devastation. Talk about inflation. Oh my God. That's hyper, supersonic hyper inflation, So, and that's been really interesting to watch in the sense of, seeing it actually happen live. Look at that. You're looking at, under the leadership of the government there, who was prime minister before president, he's taken that currency from the 1s to the 20s in a matter of, I think he became prime minister in 10 or 11, something like that, Aragon. And that product has gone, since he's become prime minister, now president, has gone up to 20. Can you imagine that? That's just an incredible talk about, hey, big guy, how about that one? There's transitory, huh? No transitory there. Oh my God, it's just vicious. And the all-time high is right there, as you can see. 21 and change. Remember, this is Hinky Ashke's. So, same thing there. It's 20. Is it? Oh, wait a minute. Okay, so let me just look at that with the glasses. 2069 all-time high. And we've been trading at 2059. So we're just like literally ticks away from all-time highs. Oh my God, I feel so sorry for the people of Turkey. You go out one day and with 1 lira, and the next, a couple of weeks later, you're paying 2 lira. That's sad. I don't think a dead cat bounce. Okay, let's see. I don't think it's a dead cat bounce. If the Fed raises rates less than before or signals that the rate raises are coming to an end, similar to CAD, bank said, then it will be a positive for the dollar. No, I think it'll be a weakness. I think they'll sell them. As interest rates have risen, the dollar rises. As interest rates drop, the dollar goes down. Now, I think you may be thinking like it's a better investment. And it may be. It might be a better investment, but it won't raise the dollar. I think the dollar will go down in value. Go back down let's put up the dollar index. Look, you're going to see here how incredibly powerful this rally has been on the dollar when the rates went up. So here it is right there. Let's just do this. So let's put it up over here too at the same time. Right there. There's the dollar index on our work rate. Where are you at? Right there. There it is. And then looking at it on J4X, there it is, right there. I mean, this is the weekly. Look at the dollar index. I mean, the 90s, no more than, once interest rates started to lift. Let's see, where is it at? Yeah, right here. Biden gets signed in, right? Remember, throughout the last 4 years, we had interest rates at 1.5 and 2 and 1.25 and so forth, and we had the dollar down in this area. We did have a spike, and what was that? That was the COVID thing. But I mean, overall, it was down in here, and then Jojo the monkey took over, and look at it. And so now you can see it's backing off. It should be down in here, the dollar. It should be in the 96s at least. I think it shouldn't be over the century mark. I think it's way overpriced. Way overpriced. It should be in the 90s. So, but I think you could be right about the other thing, and that is that people will want to invest in America if interest rates are dropping. But that won't, I don't think it'll help the currency. Because what happens, remember the old adage, and that is that America is Robin and I were talking about trains this morning, and he was talking about this particular engine that burns a cleaner coal and hotter out of Pennsylvania. And America is the engine, and the world are the cars connected to the train. And so what happens is that if America is doing well economically doing well, the world is going to be doing better economically. And when the world is doing better economically, people will go look at other investments. They'll move into, other countries like the European Union, the second largest economy in the world. I think that China is it's over with. I think China has reached its zenith. I don't think that they have like 250, between 200 billion and 300 billion buying from America. That's coming to an end. They're like an angry colony. All they want to do is destroy America. The hand that feeds them, they want to destroy. So I think we're going to work our way around that. I think you're seeing it now. You're seeing a lot of companies move to Thailand and move to Vietnam and move and so forth and move other places. I think that China is going to have to start walking on its own 2 feet. Their currency is fixed to the dollar. It's a fixed currency. It doesn't float. They've had a great opportunity to join the world economy and be a leader, and they've chosen not to. So I don't really see China sucking up all that money. I see it being more distributed as time goes on. More companies will put their businesses in other places. So I don't really think that the dollar is going to stay up in the 102s. I think it's going to go back down into the 90s. And that will be with lower interest rates. So that's why I say it's a dead cat bounce in the Swiss. Wow. Dead cat bounce. Where were we at? Oh, Turkish lira. Yeah, we've done that. I don't even want to see that. That's sad to even look at. Let's go over to the Canadian now that you mentioned the Canadian. So there is the CAD. Right there. Yeah, I hear you. It's a flip of the coin. What color tie is it? What tie? What color tie is he wearing? Oh, if it's green, does it mean something more compared to if it's yellow versus green versus blue or red? They say red ties are power ties. Blue hawkish magn. I love that. So his dry cleaning information currently is worth gold. All right. All right. Yeah, the red tie is supposedly a power tie. You wear a power tie, it means something. That's like the Greenspan briefcase. If the briefcase was thick, he was bringing more evidence for his policies, and if he had to make a stronger statement for his policies, they interpreted it a certain way. Nice way to go, Janos. Nice way to go. I love it. I love it. So, anyhow, there's Canadian. Let's take a look at oil. And there is crude oil, and it's down. So we should be seeing Canadian going up. That's usually the way it works. There's the spot oil. And oil has been dropping for about a week and a half now, it seems like. There's the high. And it's been, went down and it tries to go up. Doesn't take out that high there. And it tries to do it again here and closes low for the day. So you can see that pressure right there. You can see it, and so if oil is going down, that usually means Canadian is going up. So let's put the daily in there. You see some green. There's some green. A couple days of strength there. And when we go over to Chicago Quant, you'll see the same thing. It'll be pushing up on the upside. If I can find the mouse. That mouse. I have different colored mice. I have white mice, I have red mice, and I have black mice. So let's see. And there it is right there. Let's put in, what am I putting in? Oh, I'm going to Canadian. That's what I want to do. I want to go to Canadian. There's the CAD. Right there. Yeah, see that little pop going up? When oil is losing its value in dollar terms, Canadian loses value too. It's, an oil country. Power tie. I love it. I love it. Google Jerome Powell. I love this. You will see in all official pictures 2 colored schemes. There used to be a strong correlation between oil and CAD. There still is. We follow it every day. But you're right. It's broken down to some extent. But not so much anymore. I agree. Yeah. We follow it every day. We watch it. It seems like it occurs about 65-70% of the time. That's what it looks like. But at one time it was way more stronger. I used to watch the NASCAD as a primer, a key to it. Right. Canadian was very strong, but Trudeau is doing the same things as Biden is. He's doing his best to hurt their oil production. So, matter of fact, the premier of which one is it? Out west. They have those 2 provinces out west where they like Alberta and all like that, and she just basically says, "Don't come to my town, don't come to my province, stay out of my province." There's 5 provinces in Canada. And she's basically saying, "You're a bozo. Stay away." he has a minority government to begin with, so he doesn't really have a lot of power. He just can basically, he's like that sand in the wheel. He cranks up the cog. So from there, what we do is we go. Here's another one too, big guy, and that is we were following for a long time. We follow South African Rand. Let's put that up on the screen. South African Rand with right there with oh wow, that's a daily. They're really pushing hard on that too. And we look at that, and we look at gold. They used to work perfect, just perfect, and then look at that. It's breaking out of the trend lines even. And then we had the politics kick in, with all that cash, the $500,000 right there. We should make that green or something like that. We should make that green. Make it green like in dollars. So they found, what did they find? They found, where's the colors at on this thing? I want to change the color of that. Why can't I change the color? Oh, here, it might be right there. So there it is, green. There it is. And so they found a $500,000, $520,000, sitting in underneath a cushion in his office. And so it's really messed up that pairs trade, because you could see, like, our math would pick up, like, if there was strength like this before all this politics, then gold would be going down. Now you can see here, it is acting somewhat correct in the sense that it's moving up. And gold, you can see here, gold is moving down right there. And you can see the pressure on it these last 4 days. And we went into the sell here on this one. But, it was still rising. It was rising like this, and you can see that it has been sideways. It's not, in other words, in our estimation, where gold had gone from this time period right here, we're assuming that the South African Rand should have been around 1480 to 1510. And instead, we're trading in the 17s, and we drifted into the high 16s, but we couldn't get anything lower than that. It was, it was all screwed up from the politics. So we're stuck with that now. And I really disliked that, because it was really good. The currency really gave us a great heads up on gold all the time. I mean, 100% of the time, the currency led gold a day ahead of time. It was beautiful. Trudeau, yeah, has been hurting oil production for a long time. True, although our oil production and oil exports are at all-time highs. Right. Yeah, Trudeau is a character. Trudeau's face hurts me. I don't know. He looks like a gentleman to me on some level, but I liked his mother. His mother, what? She was a Playboy bunny, so she was pretty cool. I know that her and Billy Boy got it on at given times. I think they did foursomes or something like that. Well, Billy will palm Hillary off to anybody. So anyway, that's that. Let's see. From there. So we can't really follow the South African Rand to be a good guiding post to metals anymore. It's very disappointing. And then from there we look at the Mexican peso. That's the last currency we look at. Now, if you have a desire to see something, just let us know. What do we got here? We've got, there's the Mexican peso down at the low end of the range. And the peso seems to follow a healthy America. When America is getting healthier politically, I noticed that the Mexican peso gains against the dollar, and that's where we're at the moment. It read the election perfectly. It knew that the Senate wasn't going to be flipped. This spike here was before they lost the Georgia runoff, so they know the currencies move very well. When I was young, and we were big players in the market, my volatility in currencies always shifted before volatility moved in the United States, almost 2 days ahead of time. So in other words, if I was, when I not was, or let me rephrase that. When I was when I was trading volatility on a large scale, like one of the biggest traders in the world type of scale, I always noticed that the volatility on currencies and stock indices correlated, and the currency volatility expanded a couple days ahead of time. Now that's back in the 80s and the 90s. So, but yeah, it's interesting. The Mexican peso does a really good job, and currencies in general normally do lead more than follow. They have a good heads up of what's going on. The central banks do. So, and they control the currencies themselves. The pairs trades. On some level or another, they control them. Of course, we know that the Turkish central bank cannot control its currency. If they could, it wouldn't go from 1 to 20. It would go to 1 to 3. So obviously that central bank doesn't have much of an ability to control its currency. And you can see also, in many ways, when you think about it, the United States, we went from 92 to 115 on the dollar. The dollar became so powerful, that slows the American economy down when it's that powerful. Big Guy says, you say the dollar should be in the 90s? Yeah, that's where I think it should be. But where the dollar should go and where it will go are two different things in the trading world. Oh, no, I agree with you. I think you're right. I think that the dollar is going to go back into the 90s. I think the math says that to me. I think that what we've seen is this combination of overspending, over-regulating, basically messing with the supply chain and the economy and so forth. And I think that that'll stop. And I think that the math is saying that it's going to stop. So it's just a matter of time, really. And that's usually the way it does work too. It's a slow moving process. It's not a, they're big creatures. Not everything moves like the Turkish lira. That's an incredible move over a 11-year period, and under the same leadership. That's the worst part about it. In other words, the prime minister, now president, doesn't seem to know how to control his economy very well. I mean, when your currency goes from 1 to 20, something's wrong there. So the policies are obviously hindering growth, hindering expansion, hindering values and supply chains and the whole thing. So I'm not saying it. The currency's saying it. I'm just reading it. I'm just looking at it. What could you say? Hey, he's a brilliant guy. He's taking his currency from 1 to 20. Oh my God, what a genius. I don't think so. I don't think it works that way. Oh my God. So, yeah, accolades. Give Aragon accolades. He's taken our currency and made it go to 20. Whee! No, I go with euros. I think that the U.S. dollar looks all over the place. The euro is probably the better currency now. We used to follow the dollar Turkish lira, and it's become extremely volatile. I like Yana says, Turkey street vendors list their prices without a currency sign. Right. Smart. That's the way you have to do it. You have to do that. Yeah. Like your firstborn or the car you drove to get here, you can have that for the loaf of bread, things like that. Yeah, at one time there was a premium. There was like the dollar was trading at like 23 or 24, and the like 3 handles above. Now they're at parity, so it's pretty bad. Haggle, yeah, like here. See this watch I'm wearing? I paid $20 for it. I want a loaf of bread. Sad. It's very sad. All right. Where do we go from here, traders? Let's go over to the energy. Where is it? Oh, we were in metals. So let's take a look at silver this morning. See what silver's doing. And there is silver. And so you can see here, the last 3 days it's in a sell. We looked at the back months yesterday, where the back months in gold really reflect the true value as far as I'm concerned. And the back months in silver don't reflect anything. It's almost like it's non-existent. You know, $1 higher. So you got like gold trading 10% higher a year out, and you have silver a year out trading 2% higher. So they're not really reflecting the action. So when you go and look at like gold right now, like March gold of next year, I think is it $50 higher or $100 higher? It might be $100 higher, like I just said. Let me go double check it real quick. Let's see, where is it? I need that mouse. Come here, mouse. And let's see, let's go to there. Let's go to there. And we'll show you that calamity that's going on there. And it is a calamity. So gold. So we're looking at March. Today is trading at 19. Let's put it up on J4X. There's gold. Right there. Trading at 1911, basically around 1912. And then we go look at March of next year. Is it March of next year? Yeah, 24. So we look at, basically it's trading at 2035. It's trading $100 higher. And so then you go and look at silver. And silver, you know, is trading right now. Let's put that up on the screen. Where's that? Let's put silver up there. Oh, silver. There's silver there. So silver's trading in 23 and change. And let's put it up on J4X. So a year out in silver is, there's, you can see it on J4X there at 23.25. And then when you go into silver a year out, you can see the March contract trading at 23, basically 30. And then you go a year out, you're looking at basically, where's it at? 24, right? Yeah, so there. It's trading at 24.89. It's trading about 50 cents higher. That's it. That's not even, that's a dollar would be 5%. So it's not even, whereas, gold is trading about 9%, silver's trading about 2.5%, 3% a year out. So gold is really reflecting real values as far as I'm concerned, and everybody else is just dancing to that. Let's see. It was brutal in 2010. Euro was 150. Yeah. I remember that. I remember you guys. I started doing the webinars, around 13 during the Greta years, right before Greta. Greta wasn't in charge back then. I forget who was ahead of her. Real nice girl too, but I can't remember the name. And then Greta took over, and then from there, I think it was Polina, and from Polina to Katriana. And so, yeah, CAD GDP coming out in 1 minute. Oh, cool. Let's see what's CAD GDP. Yeah, I think we have our GDP today too, don't we? Or did we have it last week? I guess we had it last week. 1/10% It's VIX down. Let's take a look at the VIX. Where is the VIX? Down at the bottom. There it is. Right there. And over on Chicago Quant. Let's see, where is it at? Do we have it there? I think we have it there. Or do I have to open it up? I think I have to open it up. Yeah, I have to open it up. So I hit OK. Oh, let's take a look at the euro on an intraday basis, since we're there, and then I'll go find the VIX. Where is that? That's not it. Q4 employment cost up 1%. Here's the intraday euro at the moment. Oh, that's the here's the intraday cable we have up there. That's what it is right there. Look at that. There's that spike from the news. Yeah, that's why I'm a dollar. I'm a dollar bear. Yep, that's why I'm a dollar bear. Oh, let's get the volatility up there. When given a chance, it will go up against the dollar. That's the way I see it. Right there. And there's the volatility. I think I'm going to put that on that same page too. There's Bitcoin. And there is the VIX. Barely moving. Barely moving. We've been in that weekly sell now for months. Let's take that. Put that on the currency one. Or where we go? Let's grab this. Copy. And then close. And let's put paste. Yeah, see the stock market lifted from it too. So you got the dollar going down, you got the currency pairs going up, and you've got the here's the S&P 500 right there. Intraday chart. It's coming back up off of its lows. And I guess there's where the news came out right there. So that's the intraday over the last 4 minutes. So again, the stock indices take off. So I think you're right, big guy. What's going to happen is that people will want to be invested in America, but the dollar itself is going to go down. I know that sounds crazy, but in other words, the dollar will go down, and other pairs trades will outperform it because a healthy America will make the world economy healthier, minus China, as far as I can tell. I think China is going to be sideways to down. I think that's how that's going to play out. Yeah. All right, traders, we're out of here unless you have any other questions. And let's go back to the VIX for Janos again. Where are you, VIX? Vixie, you little vixen. Right there. And there is the VIX. It spiked up a little bit, and it's just hanging out here, just about unchanged. Let's make that line, format the line. That's not it. There it is. Let's format that and make the appearance, the price scale larger. Nah, that didn't do it. That screwed it up somewhere. Okay. Right there. Maybe it's this one. I know what that did. That did the sideline. So let's do timeline. No. Price line? Price line. That's it. Let's make that 14. There you go. You can see it better now. So what is it? It's plus by 3 ticks. See it right there? It's plus by 3 ticks. That's all. 1997. It closed last night at 1994. So volatility is basically going nowhere. And it jumped up to 2070 for a second there. Yeah, they anticipate. I totally agree with you. They're always anticipating. It's like the stocks. They like to anticipate. Before, what do we used to say on Wall Street? Buy on the rumor, sell on the news. In other words, what they meant was take your position off on the news. But, get into your position on the rumor. Exactly. All right, traders, we're out of here. So this is Doc from North America, living on Tokyo time. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Thank you, big guy. And tell Hunter I like his paintings. Later, later.